Hello everyone, welcome to the subject F7 and today we will be talking about group accounting. Now this video will first talk about the introduction towards group accounting. Now, group accounting, or what you guys may know as consolidation, falls under IFRS 3, IFRS 10, IFRS 13 and IAS 28. Now let's first start with the definitions in relation to group accounting. Now, when I invest money into a business and I buy the voting rights, I usually buy a percentage of the shares, or I can say a percentage of the voting rights. Now, let's first start with the definition of a parent. A parent is an entity which controls one or more subsidiaries. That means I have control over a subsidiary. Now, what is a subsidiary? A subsidiary is an entity that is controlled by another entity. Please note, when it comes to subsidiary, this means I buy more than 50% of the voting rights. Or you can say I buy more than 50% of the ordinary share capital of a company. So let me put it in an example. I am a company and I have additional money. Hence, I invest it to a company. Say I buy 70% of the ordinary shares. Now, this means that I'm a parent because I have control of a subsidiary. And the company which I bought is now my subsidiary. Remember, it has to become above 50%. Now, many people have asked, what if I actually buy only 50%? Like 50% on the dot. Now, this is what you call a joint venture. But don't worry, joint venture is not tested in the F7 syllabus. Okay? An important definition when it comes to subsidiary is the word control. Okay, as what I've written here, it says control refers to the right and the ability to use its power in the performance of the business. Meaning now I have power to actually decide things to do. Why? Because now I have the right and ability because I control more than 50% of the voting rights. Yeah, this means that now I am a parent if I own more than 50% of the voting rights. The third definition we're going to learn is what we call an associate. This is in a scenario where what we actually buy is below 50%. Usually this is 20 till 49%. Now let's read the definition. This is an entity over which an investor has significant influence. If I buy 35% of the voting rights or the ordinary shares of a company, this means that now that company becomes my associate. Yeah, by definition, it is the keyword which is very important is the word significant influence. Significant influence means that okay, significant influence states that we have influence in the decision-making process. But remember, we still do not have control. Now, when it comes to the accounting treatment of associate, what we do is, we call it the equity method. Now, equity method I will be teaching you guys in the later on chapters. And when it comes to subsidiary, we use something called consolidation on a line-by-line basis. This simply means that if supposing I have a non-current asset of 100,000 and my subsidiary has a non-current asset of 50,000, together as a group we have 150,000. Yes? Now, there can be scenarios where we do not own more than 50% of the voting rights, but we still have control. Now, this is very important when it comes to the ACCA F7 syllabus. As I said earlier, the first criteria is it has more than half of the voting rights. If I have 60% of the voting rights or the ordinary share capital, this means I have control. The other criteria means it has the power over more than half the voting rights by an agreement with other investors. Say if I only own 30%, but I have a good friend who also owns 30%, and I make an agreement with him, hey, why don't we join up and all our decisions will be united? This means together we have 60%. Remember, if anything is greater than 50%, this means I have control. Next, third one is it has the power to govern the financial and operating policies, and followed by it has the right to appoint or remove the majority of the board members. And the fifth criteria is it has the power to cast majority of the votes in a board meeting. Remember, if I have any one of these criteria, this means I have control over the company. Okay? Another thing you should note that this above 50% talks about only the ordinary shares, not the preference shares. That is a mistake which many students tend to make. This is it for the introduction to group accounting. If you have any questions, please feel free to drop them in the email address shown below. Thank you for watching this video and hope to hear from you guys soon.